back with Courtney Richardson, the Ivy investor, on another episode of Green Rush Investing. How are you doing today, Courtney?
I'm okay. It's still cold. It's not so cold, but it's still cold because I guess it's February in the Northeast. So what does that mean? It's
No,
cold.
definitely. And speaking of the cold, for everyone who's tuning in, we've got an exciting episode today. We're going to talk about our brethren up north, the Canadian growers, and do some little comparing and contrasting. So before we get started, I guess to give people context, whenever anyone talks about, talks to me, and I don't know what you think of this is, but the first thing everyone thinks of cannabis is let's invest in some growers, right? So whether it's Canopy Growth, whether it's Aurora, Cronos, Tilray, the list goes on and on. And I thought we'd actually spend some time and take a look at growers and talk about our opinions and everything on the grower space and where, if any, white space might be lying in the grower opportunity. So to start, I think one of the best things is always to kind of look at a chart and, let's pull this chart up. Hold on, let me pull my chart up and talk about why we're so excited about this industry. I'm going to share my screen. Why don't you verify? Can you see my screen okay, Courtney?
I have not yet.
Should be popping up soon. And this is probably the big one we're all looking at, is this massive J curve from 2018, 2019, all the way up to 2022, right? We're looking at legal cannabis spending in the billions. We're looking, last year's market was about $12.3 billion. And by 2022, we're looking at $32 billion, so almost a 3x growth. And the most logical thing to say is, let's invest in the guys that are going to be selling this stuff, the growers.
Mm-hmm.
What are your thoughts? Are you hot on growers? I mean, everyone talks about Canopy Growth or Tilray or, Cronos and all those people. I'd love to get your thoughts on this, Courtney.
We kind of talked about this last week in terms of the valuation, how their valuations are just in comparison to their revenue, are just kind of really out of the ballpark. And I think generally one of the biggest things about the growers is, I think, and this has been kind of the general sentiment, is that the expectation of where the market will be in 2022 is already kind of baked into the share price and to the valuation. So it's kind of like, well, what more is there where is there to go from here? And the question is kind of like, not much, because the market has already kind of calculated the growth for the next, 4 to 5 years. So with that being said, I'm not bearish on growers, but I'm not bullish on them either. I think there has to be a conversation about how much value can you impute to a first mover advantage? Like, what kind of dollar value does that have to the industry and to a company itself? But then also, then we're looking overseas, because Canada has a very small market, and we've been talking about this for a while, kind of like dancing around it, never really came out and talked about it, but Canada has a small market. So the question is, the Canadian growers, who essentially have the first mover advantage, how are they going to be able to capitalize in other markets? And I think that's where their value is going to be. Specifically looking at Europe, specifically looking at South America, anywhere other than Canada, because Canada, their cost of, yes, they're a first mover and they have these really great things going on, but Canada is not an ideal place to grow cannabis. It just isn't. It's too cold. They have to really invest a lot in terms of infrastructure, in terms of actually growing space, having greenhouses. But the best greenhouses probably at least in the on this side of the world. In terms of in North America, we're looking at California, we're looking at Arizona, places that really get good sunlight. So you're not really kind of creating artificial sunlight. So again, when you're looking at Canada, it's very expensive for them to grow. So as other markets start to kind of spring up, they're going to be pushed out of the market in terms of it's going to be too expensive for them to grow the product. So that's kind of where I am with Canada. The more they can move out of Canada and kind of really deploy in other markets, I think that's where their intrinsic value is going to be.
So I guess the question I'm always going to ask, right, and that's the question that that seems to come out here, and I'm going to share my screen again, is, do you see my screen okay yet, Courtney?
Not yet. It's coming. It's coming.
Okay. It always takes a second. But we talk about there's first mover advantage, but then there also is benefit in investing in the market leader. So when I think market leader, or currently the market leader, I think of Canopy Growth Corporation. And I've got their stock chart up on the right. Here we have them, their market cap is $15 billion. I have big news article where Constellation Brands has invested almost $4 billion into Canopy Growth Corporation. And Constellation Brands, right, they're the maker of Corona, a massive alcohol and beverage company out there. And then I look at this, I'm looking at that chart. And I guess the question I have is, why wouldn't, doesn't it make sense to to bet on, to follow Constellation's bet and go into Canopy Growth?
Well, I think the valuation is entirely too high. I think there is some value in looking at Canopy. And I think, as I talked about earlier, it's more or less looking where they're going to deploy outside of Canada. And Canopy has just started to deploy in New York when it comes to the hemp. I think they just purchased, or at least in conversations about a hemp farm in Southern New York. So again, they're really being able to move into a legal space, which is the hemp farming in the United States that's now legal. So it's kind of like how they're able to kind of deploy there. But again, I think the valuation is just too high. I don't know what the multiple is, but it's something ridiculously high. I don't know where my note. I don't think I had the multiple, but it's just really, really high. So at this point, you're looking to it. It depends on how you invest. If you're a technical person and you're kind of going for a swing trading, you might want to hop in, jump out, whatever. But in terms of I'm a fundamental investor and I just buy and hold forever, or at least the time that I need to jump out because of something going terribly wrong with the market fundamentals of that company, or I should say the fundamentals of the company. I'm not really sure Canopy, it is the biggest company. I'm just really nervous about how they're going to be able to grow over the next couple of years to really justify kind of this, as we talk about in passing, this marijuana bubble.
Interesting. And I think it's also worth maybe reiterating, this was kind of a big aha moment for me a couple weeks ago when you brought this up. But I think it's right. We look at these numbers and we look at this guy on the left-hand side, right? We look at this big J curve, but you revealed that Canopy Growth, they're just building in New York, but they currently don't operate in the US at all. Is that the case?
That is correct. I have to double check on where they are in that process in New York, but let's go back for a second. Canopy trades on the New York Stock Exchange and the Toronto Stock Exchange. And one of the conditions of the Toronto Stock Exchange and the New York Stock Exchange is that you can't engage in any illegal activity. And one of the things until relatively recently, all cannabis growth in the United States was legal up until December of 2018. We talk about this a lot. But then hemp, which is industrial hemp, which is cannabis with under a 0.3% concentration of THC, is now legal to be grown in the United States. So now that they're kind of moving into the United States, now they're still able to kind of stay within the rules and regulations of their stock exchanges where they're traded, and still kind of break into this other industry. Was that the question? I feel like I went so far down the rabbit hole, I didn't come back.
Yeah, no, that's a valid thing, and it's worth noting, where the market share is, right? So if I dive into this, I'm not sure if you can kind of see this. Maybe I can draw on this. Let me try to do some annotations. So I'm going to draw, right? We even look at 2018 because that's where we are. What you're saying is from here to here, right? That's where the big money is in this market. What you're saying, though, is Canopy Growth is just in this little guy right there. And they're not the only guy in that little guy. So they're the guys that are in there. But what we don't have is, let me see if I have a different color. Hold on, let me change the color. What we're not investing when we're investing in Canopy Growth or Cronos or Tilray is this guy right in here. And this guy is the one that, if I look at this right here, geez, lots of scratching.
Okay, so wait, where are you? Are you on the legal cannabis spending?
Yeah, can you, you can't see the, are you able to see my drawing?
Now I see it, perfect.
Yeah, right. So I'm looking at this as, if I invest in the market, I want to, ultimately I'm making a bet, there still is some gamble, right? I'm making a gamble that the investment that I'm getting in will capture future market share. I'm looking to buy at today's rates so that tomorrow, when the company is growing and flourishing in, call it 3 years or 5 years, that it is able to grab a hold of this. Now, what you're saying is that all the people that are listed that are easy to buy, people like Canopy Growth Corporation, people like Tilray, maybe people like Cronos Group, aphria, the list kind of goes on. They actually only represent this little red guy in here. And that's where they're at, because if I understood you correctly, if I'm actually producing marijuana today or growing it, I'm not allowed to list on either the Toronto Stock Exchange or the US Stock Exchange.
That's correct. So
then that begs me to wonder, even if I look at today or if I look at tomorrow, I mean, 11.0, the bigger number here is this, call it, let me just keep this in blue, this United States number right there. That 11.0 is it's almost 10 times the size of this 1.3. So where is that guy? Because I mean, if I were to extrapolate this in the same way, a Canadian focused person is Canopy Growth. Where's that person that has 10 times the market size of Canopy Growth or has 10 times more exposure, or a 10 times bigger company, because they're able to attack this market versus that market?
Well, and I think I'm glad that you put this in perspective this way. So I think one of the things that we have to kind of watch, and I'm not really sure what this is going to be, and as we talked about earlier, we don't have a crystal ball, but as these companies, because they actually have access to capital markets on a level that United States companies just don't have yet, even if they are listed on the Canadian Stock Exchange, the Canadian Securities Exchange, which a lot of them are, or I should say some of them are. They're starting to look to that market to get access to the capital markets. But these companies, Canopy, we're looking at Cronos, we're looking at Tilray, they already are on the stock exchange. They're already kind of there. And I think once they start to deploy into the United States to at least take advantage of the legal hemp market, I think they're still going to have a first mover advantage there, because they're not going to, they're not encumbered by this other kind of illegal activity. And what I mean by growing marijuana specifically, but they're not encumbered by that. And then they also have a lot of, both of these companies, specifically Cronos and Canopy, have just got a lot of cash infused. So they're going to be able to deploy that cash a lot easier. And these other US companies don't have that infusion of cash on the level of these other companies that are publicly traded in Canada. So I think there's something to be said there. What it is there, how they're going to deploy it, what that looks like 3 years from now, I'm not sure. But I do think think it puts them in a decent position to really capitalize on that legal US market in a meaningful way to really kind of open up their market.
Interesting. So so I've been geeking out a little bit on growers because in the past I haven't been a grower person because I looked at these Canadian numbers and they just seemed a little astronomical. But you really got me thinking about the US side after our last conversation. And I pulled up a little chart, or not, I put a little chart together that basically on the left-hand side, can you read this okay?
Yeah, I can see it. Mm-hmm. Yeah, we're good. Okay.
Inside, we have the Canadian growers.
Mm-hmm. Okay, I see them.
And that's just a listing of the Canadian growers. Just kind of took the top 10 I could find. I don't know if I might have missed a few or not, but got Canopy Growth, Aurora, Tilray, Cronos. Then we get to the smaller ones, Aphria, Hexo, Cantrus, list goes on and on. And then on the right, I have, these are more US growers or suppliers. So we've got Curaleaf, Trulieve, Charlotte's Web, MedMen, Acreage, Green Thumb, the list goes on. Mm-hmm. And what I've noticed here is there seems to be a pretty sizable valuation gap between the two. Both are trading. So I summed up, their revenues, and both of them, there still is definitely a lot of speculation. But if you look at the top 10 US guys against the top 10 Canadian guys, you're looking at annual revenues of 236 million, between 200 million. But what's noticeable in difference are the market cap numbers. The aggregate of these 10 US suppliers comes out to about $9.8 billion. While the aggregate of the Canadian guys comes out to $49.9 billion. So that's literally it's 10 billion versus 50 billion. And then if you dive into it deeper, using my chart on the left-hand side, if we say, where will they be in the future? Because we're doing, this is not definitely done on any sort of present value cash flow basis. I'm looking at Canada in 2022 is 5.5 billion, while the US in 2022 is 23.4 billion.
Yeah, that's huge. That's interesting.
Now, it's a fair statement to say that I guess these guys represent a larger percentage of Canada's market share than these guys do, right? If you look at 230 million against the current market share of 1.3 versus 200 million against the current market cap of 11 billion, there definitely is some sort of underreported US side where you've got maybe lots of private US companies or companies that are running under the radar screen on that. But I just want to bring this out and get your opinion, or maybe let's talk about this. Because I would imagine, well, first is strategy and then second is why. But first is I would want to be with the company that's in the market that is ready, that's got the best chances of winning.
Right.
And I'm not saying that Canopy or Aurora or Tilray are not as capable, or even, they definitely have a capital advantage. $3 or $4 billion, or the money Altria gave Cronos is a significant amount of cash. But there's something I feel about if I'm in the game versus if I'm not in the game, like that's definitely some sort of advantage, right? So someone like, Trulieve, they're big in Florida. They've got dispensaries and, they're running as we speak, right? And while I'm not trying to dismiss Canopy or Aurora or Tilray or any other sort of third party getting into Florida, if someone's in there already and they're selling product, that is somewhat beneficial.
It is. Oh, most definitely. I think honestly, what will happen, I really feel like this is going to happen. You're going to start seeing consolidation between some of these Canadian focused companies or Canadian companies actually coming in and trying to, because I think one of the things that we don't talk about a lot is the fact that these companies are they're burning cash. Like they are just burning cash at an astronomical rate. And there's a lot of problems with them running even a legal business in the state side. So there's 280E where it's an IRS rule that does not allow you to take business expenses for illegal activity. And in the United States, all of this is illegal activity, except if you're growing hemp. And these companies that you're showing me are Charlotte's Web and CV Sciences are the only ones that I see that I know offhand are actually doing hemp I guess, production. So these other companies that are doing marijuana, they are running into cash issues because of the way they have to run their business because of the illegality on the federal level. So with that being said, is I think some of these Canadian companies are going to come in and kind of, because I think you make a very valid point. It's like these companies have been operating and running in these states, understanding how this company, how the state works, how the regulations work, because each state is different. So why would you kind of just jump in without kind of some support of somebody who's been running the business already? But I think because the Canadian companies have a lot of cash available, or starting to have a lot of cash available, I think they're going to start to deploy and actually start consolidating in companies that are actually doing the work and doing relatively well in this U.S. market, if that makes sense.
So that becomes an interesting perspective. So I guess there's a whole thesis, right? Investing, we want to skate to where the puck is not going. Is there, if I were to sift through these, and this is obviously a high level, so obviously you got to dig in deeper to find a diamond in the rough per se, but would it be what do you think of would there be a bet to be made saying that, hey, these US companies, let's use Trulieve as an example, 20 million in revenues, 1.3 billion market cap. Like, is there some sort of a valuation differential between maybe a US grower right now and a Canadian grower? And does that mean that just Canadian growers are overpriced, so that's a bubble to pop? Or could the US growers kind of come up and match Canadian grower levels?
I think they can. I think it just depends on how all of this shakes out. And I think I've done a lot of reading on this particular issue. The question is that are these companies, I really think some of these companies, these US growers, are going to spin off their hemp facilities to actually be able to take advantage of the legal market. That's what I think. Now, if that happens, then I'm going to really be curious to see how that looks in about a year, because I don't think, and this is my opinion, my educated opinion, my hypothesis, is that I don't think that these players are going to be the same players, at least in the US space, a year from now.
Oh, in terms of, so you're thinking the US people might get bought. So like someone like Acreage or Green Thumb, or, the list goes on and with these guys, what, the Tilrays would come in and take them out, or the Cronos would take them out?
I think any company with a large amount of cash available is maybe taking people, I don't want to say take them out, but actually purchase it. I think I can see some of that. But then also I think, and for example, and I don't know a lot of these companies, kind of the way they're set up, but say, I don't know if Curaleaf has like a hemp side. If they have a hemp side, then they just say, you know what, we're going to spin that off because we can actually get a better market value and better capitalization on that side. And we'll keep our marijuana function, but we're going to focus or spin that other side off. So I also think there's a lot of companies that are kind of looking to do some spinoffs of their hemp side if they have it. So I just think that this list may look very different. And I'm not sure what that means, if that makes sense. I don't know what changes is going to happen to the list. I just think this list is going to look very different.
Yeah, no, we all know there's going to be change is going to happen. So I guess the question is, as the investor, can we find, right? So what's the benefit, right? I guess if we find a supposedly undervalued producer or an undervalued thing, if we invest in now and someone comes in to buy it later, there's usually some sort of a premium, or what are your thoughts
Sometimes,
on that?
they try to make it attractive. So they try to make they try to make the deal attractive so shareholders will actually agree to the deal. So I think that's very important, is that understanding how the stock market works and how companies work. The shareholders have to agree unless it's a house. Well, let me clarify. The board agrees and then it's taken to the shareholders, unless it's a hostile takeover when the board does not agree. And we actually had that going on with aphria and Green Growth Brands. I don't know where they are in that whole process. I haven't kind of kept up. It's like as the world turns with those two. But again, it's kind of like, what does this, between the two of them, the question is that, what's going to happen? What are shareholders going to do? So to answer the question directly, if there's going to be a premium, I believe there is going to be a premium, because again, they want to make it attractive for shareholders to actually sign on. But then you also have situations where you have a hostile takeover. I don't think we're going to have a whole bunch of that. They're usually not successful generally, but even still, Green Growth Brands, they were trying to sell it, to actually pitch it at a discount. So again, it's kind of like, I think overall, for a successful bid to happen, they're going to have to give a premium to shareholders for them to sign on. That's what I think, if that makes sense. So that's my answer.
Oh, interesting. So speaking of which, have you been looking at the, you said was it aphria was doing a hostile takeover, or which one was that? Or
Green Growth Brands is a company out of Ohio. They are run by kind of like some really big retail giants, I guess I should say. I don't know if you know anything about Ohio, but they have like Bath and Body Works, they have Express, they have all those kind of.
They're the ones that did the shopping center deal, right?
Yes.
Oh, okay.
Yes. There's a couple of deals, and actually DSW and Green Growth are now doing another. So let's back up. So Green Growth Brands did a deal with Simon Properties. If for anybody who's in the East Coast, King of Prussia is owned by Simon. There's a couple of really big malls.
Oh yeah, that's the biggest. Is that the biggest one? It's pretty big. I think it's either one or number two in the world, right, in terms of mall size.
It's pretty big. I think so. I think at least at the very minimum, it's the biggest on the East Coast. It may be, it did have like this extension that's added to it. So I think it might have overtaken Mall of America, but I'm not really sure. But it's a huge mall. But that's kind of what most people associate Simon Brands with, these kind of really, really big malls. And so Green Growth Brands has got into an agreement to have CBD stores and Simon properties, and they're in their properties, whichever properties. And they have like a lot. They have premium outlets, and they also have very big malls. But then on top of that, is that DSW has gotten into an agreement with Green Growth Brands to offer their CBD products in their stores. So there's kind of, you have both of those things going on at the same time. So that's the company that is looking to do a hostile takeover of aphria. And I think that's it's been a lot going back and forth with them. Apparently they did make their takeover bid official, but I just don't know exactly where we are with it. But it's a very aggressive type company and company move.
Yeah, well, I'm looking at the chart. Let's take a closer look. They weren't on my list. And oh, wow. I'm looking at the financials. Wow. This is a very aggressive company right now. So we're looking at a company here. Now, are these guys Canadian? No, you said they're Ohio-based.
They're Ohio-based. Mm-hmm.
They're Ohio-based. They have no revenues as of July. Maybe there's more to be reported, but on the annual side, that's blank also. And this is their stock symbol, right? Green Growth Brands, GGBXF.
That is them. They actually, so here's the interesting thing. They did an RTO. They did a reverse takeover. I want to say it might have been October. It was sometime in 2018. It might have been October. So that they took over a company, like a random Canadian company, I think it was engaged in maybe oil and gas extraction. So they did a reverse takeover. They were operating as the name of that company. And then recently they did a name change of that company. So some of their financials are going to be slightly off um, because of this kind of reverse takeover. And I think that kind of brings up another point in this space is that because it's very hard for US companies to kind of go through the regular process of getting money and getting kind of investors. And what I mean by regular process, actually going through the IPO process and then going to the public markets. The United States on the market side is the biggest market in the world. So again, they don't have access to that. So they're just trying to get in where they fit in. And one of those things is that they're kind of doing like interesting kind of deals to kind of get on. And like I said, they're doing the reverse takeover. We talked about another one last week. I don't remember what the terms of that, but there's always something going on. And I just think it's very hard for us to really look at a company on its face as to what's going on because they have this kind of shell thing going on. And it just makes things a little bit murky and very hazy. And I think a lot of people want to jump into the cannabis market with not understanding kind of those back office things that really do affect the way the company looks on paper. Is that we just have to really kind of slow walk it if we notice some of these things are going on. If that makes sense. I hope that makes sense.
Yeah, no, it does. It's kind of interesting. So then these guys, they're a US based company. Wow. I mean, worth almost $1 billion. They've got some agreements in place, and then they're also trying to take over Aphria, which is a Canadian company. Is that correct? Or
that's correct.
And Aphria, wondering. Well, maybe first before we get into it, is either Green Growth or Aphria something? Oh wait, no, that gave me Cronos Group. Are either of those companies that you're interested in right now on the portfolio side, or is this something to maybe hold off on a little bit because, wow, I mean, I was thinking Canopy's valuation was a little high. I'm looking at this Green Growth Brands, and this is pretty rich for me.
Yeah. So I think they're an interesting company. I think they have some really good players in terms of management. And I think that's another thing that we kind of don't really talk about a lot, but kind of we understand it and kind of like as we go to the market. When I'm looking at a company, I need you to have a good product that you're taking to market, but I need you to have a stellar management team, especially in this type of space. And I see that Green Growth Brands has a very good management team because they are very retail oriented and retail focused, kind of like in the retail hub of the Midwest, looking at Bath and Body Works, Express, and all of them. So I think they have a good team, but their financials give me hives. So I'm holding off on them for now. I think they're, like I said, I have like certain things that I take a look at. And then there's other companies that I'm like, okay, I'm jumping in, I'm investing. And there's other companies I'm saying like, okay, I'm going to let you sit on the stove a little bit more. I need to kind of watch the way you boil, the way you simmer before we go to the next level, because I think they have something good there. But I think that other things going on in the background just doesn't make me very settled with what they're doing. That makes sense.
Yeah. Now you said they are buying, or they made a hostile takeover attempt on Aphria. So I'm just going to Google it really quick.
And it's still going. I just looked at it online and I was like, oh.
Wow. It looks like, I mean, I don't know if this is the reality, but I just Googled Green Growth Brands and Aphria. And the first thing is, what now after Aphria board tells Green Growth to take a hike? So it looks like there was a massive or a perceived undervaluation on that deal. Huh. So why would a company like Green Growth want to buy Aphria, a Canadian? Because Aphria is a Canadian, they're a Canadian producer, right?
I really don't know what the allure is. I can see why I know what their justification was for undervaluing or asking for a discount is that Aphria during 2018 made two purchases of two purchases, I guess, of property in Jamaica, also in South America, and they were saying that those purchases were actually to the benefit of insiders, and also they were severe and well, let me clarify. Let me back up for a second. That the thought was is that they were severely overvalued, and this overvalue came from the overvalued portion actually was attributed to the transaction to be between insiders and the company. So I thought, and it was, so basically we're looking at the company saying they had bad management. That's really what's being said, is that they had bad management. Green Growth brand said, hey, we have an excellent management team. We want to take you over. And that's the conversation that's been going on. Now, I don't know what they feel that would benefit the shareholders. They have done it, like I said, is at a discount. But then on top of that, which I think is really interesting, is that remember, aphria is on the New York Stock Exchange. They're on the Toronto Stock Exchange. Green Growth Brands is engaged in both legal marijuana and legal cannabis, which is hemp. And they're also engaged, as far as I know, in illegal cannabis, which is marijuana. So because of that, they would be forced to be traded on the CSE where Green Growth Brand is currently now. So if I was a free shareholder, I'm like, I'm not really interested in kind of messing with you guys that you would take us over, because I'm going to lose liquidity by going to an inferior stock exchange.
Oh, okay. So that's interesting. Now, and that's probably worth discussing, is this whole liquidity premium, because that's interesting that you bring that up. So basically what you're saying is, because Green Growth, because it's US based, is listed on the CSE, while aphria, are they NYSE? Yeah, it looks like aphria is actually on the
NASDAQ,
yeah.
Which one?
Let me just share my screen again while I take a look at my list. It says
they're on
aphria, NYSE, NASDAQ real-time price. So I haven't looked at it close enough to see the difference, but it appears to me that aphria is listed on kind of a more, it doesn't say OTC or anything on that front.
No, it's definitely New York Stock Exchange. It is. I'm looking at it here. So they are listed on New York Stock Exchange. I think Cronos is on. I don't know.
Yeah, Cronos is also on NASDAQ.
Yeah, they're on NASDAQ. But aphria is on. They are on.
Yes. New York Stock. Fascinating, I guess, to look at is maybe the model, and maybe this is what explains, right, our Canadian grower and supplier ratios versus the US grower and suppliers. People can see the screen. Is the function, oops, what happened there? Is the function that this could just be a liquidity premium.
Mm-hmm. Oh,
right?
That's a good point. Yeah.
I mean, if I want to go buy a CSE traded equity, I can't just go in and go to my Ameritrade account and just click Ping or click Robinhood. Sometimes I have to do a little more. Right. I think, and I got to double check on that, and maybe I should look. This is worth exploring more, right? I know I actually have two different accounts for buying general stocks and specifically for cannabis stuff. One was just my normal Ameritrade account where I was just, buying all sorts of things, whether it was tech stocks or cannabis stocks. But I've actually had to open up a interactive brokers account just to purchase a few, a few companies that aren't widely traded.
Right. Yeah.
And I wonder, that's an interesting point to bring up, is that access and availability. A lot of people probably might not even be aware of maybe whether it's Green Growth Brands or some of these other under the radar American-based cannabis companies that they just don't even know how they can buy it, right? So they just Google weed, they find, there's Canopy Growth, there's Aurora, there's Tilray, there's Aphria, and then they just kind of, I guess, for lack of a better term, swipe right and buy some shares.
Yeah. I mean, that actually could be happening a lot. And there's a lot of conversation. There's a lot of conversation about these Canadian growers and the fact that the hype has been so high because they legalized in 2018. So there's a lot going on just for this, the sake of, I can reach out and touch, I mean, for better terms, I can reach out and touch these companies, where these American companies are a little bit harder for me to grab, to reach just generally. And sometimes so for example, I primarily trade with Merrill Lynch. I have a Robinhood account because a lot of people like Robinhood. I was just like, let me see what's so special about it. But when I actually do my Merrill trading, I have to go through a lot of hoops to trade on the over-the-counter market, where these Canadian Securities Exchange companies are trading. So I have to get a number, and I have to put in the trade, and I have to confirm the trade. And honestly, that's very, especially when you're looking to do a market order, that can really lose out on an opportunity because you have to go through all these hoops. So I do think there is some kind of liquidity premium there. To what extent, I don't know, but I do think there's some there. I think there's a lot going on into the pricing of these Canadian companies. I think there's a lot of hope. I think there's a lot of expectations. And I also think there's just kind of the ability that they're so accessible, if that makes sense. So I think we have a couple of things going on to kind of bake into these numbers and give these astronomical valuations that just are not, they're not grounded in fact.
Wow. Well, while you're on, I found another company that I'm not sure if you can see this or if you've heard about this, but this is, going on our thing. I'm going to enlarge this so people can read this. This is, on the reverse merger side of things. Oh. This is a new type of cannabis SPAC, which is got $100 million revenue profit base. Let me just send this chat over to you so you can kind of take a look. I look at your mouth is watering,
What is this?
And this is interesting. It's called Cannabis Strategies Acquisition Corporation. And, going through it and everything, obviously for everyone tuning in, this isn't like, we're not saying go buy this. We're just kind of looking at this. It seems like they've got a pretty good management team. And what they've done is they've made 5 simultaneous acquisitions of US-based cannabis companies.
Oh, wow.
Across, Nevada, Massachusetts, a bunch of different places. It looks like there's also a punch brand. A variety of things coming together. More importantly, it looks like Massachusetts also. More interestingly enough, it is expecting Canadian 240 to 260 million in revenue for 2019. So if you just kind of do the math, that's probably what, 150 to... Is that the exchange rate difference between the Canada and the US side? Well, it's some number, but it's still a pretty big number.
Yeah.
And if that makes sense, that would put this company on par or even larger than Canopy Growth Corporation. Right.
Which is interesting, to say the least. But I think... And I think this really points out the problem that we have, is that the United States has this pit of money, but they don't have necessarily what we would consider to be the opportunity. And what I mean by the opportunity about this kind of legal business to really be able to take advantage of these legal businesses. But Canada has, I don't want to say a glutton of legal businesses, but they have a lot of legal business, but the money's not there. So it's kind of like this push and pull and this disconnect, because it's kind of like you have what I want and I have what you want, but we can't seem to make that work. And so I think this kind of SPAC, the special purpose acquisition companies, kind of does some mergers of that, but it's just still very, they're interesting, but I do think they're very speculative. And I'm just really looking at them with interest, but not necessarily saying like, hey, we should jump into this.
I can't even find this thing actually right now on Yahoo. And it says it trades on the Neo exchange. Geez, Neo makes me think it's a cryptocurrency.
That's great. That's really interesting. I'm gonna look at it, see what I have over here.
This is what called the Canada Neo exchange. So this is a different type of exchange.
Mm-hmm.
Oh, it's Canada's new stock exchange. Wow, this thing's only literally 3 years old.
Oh wow.
Huh.
Yeah. Okay. So it is Toronto based. Interesting. I would really now they do have a filing with SATR. SATR is the Canadian version of Edgar, which is the SEC kind of reporting for companies, where the 10Ks, the S1s, the 8Ks, the 10Qs go. So
Yeah, actually, here we go. This is, wait, is this cannabis strategies?
I have CBAQF as a ticker. Is that what you have over there?
I'm just looking at, I don't know. I'm literally just looking at this. Okay, so there's a warrants are being traded.
Mm-hmm.
And then there's CSA.A. Oh, wow.
Okay, hold on, let me see. I think I may.
This is interesting. Cannabis. Okay, so if I look at it, I have Class A restricted voting shares, rights, and then warrants.
So try the CBAQF. I think that is the symbol. That's what I have for the.
Wait, what did you have again? Sorry, what was it?
CBAQF. So C as in Charlie, B as in boy, A as in alpha, Q.
Oh, CB. That's the OTC version. So
right. I can't seem to find the Canadian version. Did you find the Canadian version?
I mean, I'm literally, if you can look at my screen, I mean, I'm going as we go. So we look. What the heck you're buying too? That's the other scary thing. Got to do some research. This is probably a fun episode for next week. We can actually dive into how to actually get into one of these and figure things out. So this is Canopy, CBAQF.
Mm-hmm.
Okay, so this isn't right. It's got a market cap of 44 million, which doesn't add up properly. There's probably some prospectus or something like that involved, because if I pull back these financials.
Yeah, I'm looking. I think I have. SATR is very hard to navigate, but I will take a look at it and see what SATR has.
Yeah, so I've got this. I've also got CSA.A. I would imagine the Class A restricted voting shares might be the ones to get. I'd probably pick those over warrants. But again, I don't know. Okay, so this is interesting. So there's a differentiation here. This has a market cap of 213 million against 44. So obviously we need to do some research on this and have a bit of a discussion on this as this becomes interesting, because I mean, let's go back and take a look. And again, I don't want to put it out there, but if I go look at Canopy Growth, right, I'm looking at Canopy Growth Corporation, and these guys are worth $15 billion right now. And if I look at their revenue numbers, $80 million in revenue as of 2018. Now, it's grown a little bit. So if we look at 2018, they're on track for $100 million. That still is, that's a pretty healthy value to revenue ratio. We're not even talking about price to earnings, right? Because that's not applicable. We're talking price to sales. And these guys here, I don't know if this is right, have a $200 million market cap. And if what they say is true, here is $100 million or $200 million in sales. I mean, that would put these guys on par with a Canopy Growth Corporation.
Right. Hmm.
but at a significantly, now, again, we're literally just, as we were talking, I was just Googling and I found this and I thought I'd bring this up to you. And now
Yeah.
we're not even talking anymore. We're just kind of geeking out.
So
Uh,
are we? So with CSA, I think are we in Canadian dollars?
I have to double check and I'm not 100% sure.
Okay.
I would assume because this isn't even like this is its own exchange. So if I go back and look here, let's go back to this thing I found, right? So it runs on what's called NEO, which is CSA.A, CSA.WT, and CSA.RT. So it looks like there's 3 different types of shares to be traded.
Okay.
And then it also runs on OTC as CBAQF.
Right.
So my assumption definitely, I'm not sure what the CBAQF is. It looks like based on Yahoo, that's currently in USD. So this is US dollars. And then actually that might make sense then because Canada, let me just do Canada to USD exchange rate. So if I had 1585 is 11. Okay, so 1585 in Canadian is 1197 here. So it's 1194. So it's actually not too far off.
Okay, so they're very close in terms of like exactly what that's you know what that's very interesting. Sometimes there is still a differential, like a very far, even if you do the conversion, it's still not quite right. It may be like off by a dollar or so. So that's
I mean,
interesting.
this is pretty thinly, I mean, these are both pretty thinly traded. I mean, we're looking at, on the OTC side, you're looking at average volume of 11, 12,000 shares a day.
Oh,
I
that's
mean,
nothing.
you can't, I wouldn't buy, I mean, I don't think OTC is the right way to get this and
No.
everything. And these numbers just are off, right? 44 million market cap on this side, while this one is 213 million. This one, I'm not sure what the daily, oh, wow. This is crazy. It's like every single, oh, okay. So you can buy it from Morgan Stanley.
Okay.
So you can get it through there, I guess. But this is just looking at historical data. Does it tell you what the, okay, so daily volume on this is still pretty thin. We're talking 50,000, 100,000, everything on that side. I mean, this is, oh, and it's almost time to wrap up anyways.
Yeah. Good
This is
for
a good topic for next week. Let's explore this and see, right? Have we found with this CSAC, Cannabis Strategies oh gosh, so many acronyms. With CSAC, have we found the next Canopy Growth or aphria before it happens? Huh.
I don't know. I think I'm really curious to see what our research comes up with because now I'm very interested.
Yeah, this is like really interesting. So let's kind of get wrapped up for everyone who is tuning in. Thank you for tuning in. There are definitely, even though I have been anti-grower, Tiffany, you kind of opened my eyes, or not quite Tiffany, Courtney, you've opened my eyes to all these opportunities, especially with the regulatory side of the equation. And given this market liquidity issue, I can only imagine that maybe there are opportunities in the waiting on this. So we'll see next week.
All right. See
All
you next
righty.
week.